Good morning, everyone. How's it going? It is Wednesday, October 18th, 6 a.m., half an hour before the market gets started. So let's see how it's looking. All right, so we're going to take a look at our futures. And let's see. And so far, it is actually looking a lot like yesterday. We are kind of Dow is kind of down about quarter of a percent. The Nasdaq is over down over 0.5%, and the S&P is approaching 0.5%. So very, very similar to yesterday. And yesterday, of course, when we had this pattern, I was saying how it indicated weakness in the market, how money seems to be flowing out of the riskier stocks in the Nasdaq more into the Dows, and it looks like that is continuing today. Of course, yesterday we ended up barely higher. It was actually a flat day. In the S&P, it was up 0.01%. So we opened low and went higher, which is a good and positive sign. But with all these mixed signals, the market is really just chopping sideways. And that is just a period of consolidation. We were talking about yesterday how we're reaching a point where the market will likely have to either move upwards or move downwards. And there's a bunch of forces at play right now to kind of push it one way or the other, and which is why you're just seeing it go sideways. At some point, one side or the other will break, and we're just waiting for that point right now. But so far today is looking very much like yesterday. Crude up a tiny bit, and so one big difference looks like might be the bonds. I'll look at it over here. ZB. Okay, so bond futures, so they are down, but not down like yesterday, where it's similar to yesterday. So yesterday we opened very close to the lows, or maybe just below or just above the lows. Today we're opened in the bond market not near the lows, but below the halfway point of the bar. So it is a little bit different. There's a little bit more strength in the bond market, so that might not put as much pressure on the market as we saw yesterday. Let's take a look, since we didn't really yesterday until after the market, but we really should take a look at the economic calendar and see what's going on. We've got housing starts and permits, with petroleum report. I don't think the petroleum report is going to make a major difference. Energy is strong. It's been the strongest sector. So if you kind of listened all week, we've been saying that energy is the strongest. That's probably where you want to put your money. It's the only sector that we're very sure right now has upward momentum. And sure enough, the last few days we've had really strong bars over here. Let's see if there's any. Well, today the crude oil is opening a tiny bit higher. So we're just going to look for continued momentum upwards in energies. And then the housing starts, so that came out already, so let's take a look at that. Okay, we were expecting 1.39 million starts. We've got 1.35, so that's basically as expected. And 1.45 permits, we got 1.47. So nothing crazy. We're pretty close to the numbers right here. We're definitely within the consensus range. So no surprises here. We shouldn't see huge jumps in the price of, for example, the real estate sector or the home builder sector. But now that certain uncertainty is out of the way, what will happen most likely is a resumption of direction that we are already moving in. So XHB has been up, then down, then kind of up, so a little bit of chop. So this one we really want to watch to see which way it goes, but it's been holding above that MA200, so we may see a break above that EMA20 or challenge the EMA20 again today. And XLRE, we are right at the EMA20, so it has a lot more freedom to move upwards. And we do have the EMA8 right there. We're kind of very close to both the moving averages, so it could move down, but it looks like it has more upward momentum. So at least right now, before you see the market actually trade, we can anticipate that the slightly more likely direction is upwards both for XHB and XLRE, and that should be positive for the S&P 500 as well. So as long as we don't have any weird earnings or big earning surprises, then most likely we'll have a very similar day today as we did yesterday. All right. Okay, I want to take a look a little bit at, oh, I had an interesting thought, but before I get to that, let's take a look at some places where we can look to put potentially day trade. Okay, and so one of them still going to be Tesla. We had a question yesterday about not being able to get out of positions. So I'll reiterate what I said yesterday, and that was if when you're day trading, you don't want, and you're in positions that move very quickly, and if you're in a liquid stock, then they will most likely move quickly. Once it's trending, it's moving. And if you're getting out because the trend turned against you, that could move pretty quickly. So you don't want to mess around with trying to split bid-ask spreads. You just go in at the bid or at the ask. So, or basically a market. You go in at the market. So if you are going to day trade these options and they're moving, then you just want to make sure that you get in or you get out. You don't want to leave any room for error right there. So today, if you're hanging on to a Tesla long or short, we're just going to draw these levels right here. Today is a lot more muted in terms of the action in Tesla. So Tesla has earnings, I believe, today after the market. Let's take a look at that. Not even showing up on here. That's weird. Okay, Netflix has, that's really interesting. Tesla. October 18th. Oh, they reported this morning. That's weird. Or they're supposed to report this morning. No, aftermarket. No, A is aftermarket. Sorry. Yeah, so they're supposed to report today after market. I don't know why it didn't show up over here. Well, now it shows up. Okay. Maybe I did something wrong. So we may see more muted action than we have the last few days. So you see, like in the morning action, there's that big movement right here, and so far we've just been chopping sideways. And the day before that, there was huge movement. And the day before that, there was huge movement. So today is looking at least in the pre-market, it's a lot more quiet than it has been all week. And that is likely due to earnings coming up. You're about to have an announcement, and normally we are quiet going into the announcement. But during the day, we could still see some trends. It doesn't guarantee that we're going to just kind of chop this way. But what we want to do is just make sure that absolute certain that your day trades are closed by the end of the day. So right now, these are the levels that we're looking at. If you get strong movement at the open, you definitely want to take advantage of it. So if you are in a calls and it starts moving upwards, then you're just going to hang on to it until you see an area of consolidation or you get those 5 Heikin-Ashi bars. What that might look like is, or if you get a huge bar. So we see, like yesterday in Bank of America, we got that huge surge upwards. Then we had a large bar, but a tiny body. And that tiny body was towards the bottom of the bar. That is an indicator that we might be turning around. So if you see something like that, that might be a good time to exit. Or if you see this next bar basically did the exact same thing except it was red, then that would be an indication, an earlier indication to get out rather than waiting for the 5 Heikin-Ashis. And so when you have strong, fast movement like this, you probably want to look for an earlier indicator because a Heikin-Ashi takes 5 minutes to develop. Whereas here you can look at it, you can figure out that you want to be out within 1 or 2 minutes. Okay, so same thing to the downside. If you're holding puts and you see that rush downwards, hang on until you see an area of consolidation or you see similar bars except flipped around, and that would be an indication to close. And of course, if you have a call and it starts, you see that big bar downwards or you see motion downwards, I would just close it. And vice versa. If you have a put and you see that rush upwards, then go ahead and just close it. Otherwise, if it's going to chop around for a while, then you exercise your discretion. If you're going to wait and see if it does actually break out of one of these lines and start trending, if you're going to day trade anyways today, and you're comfortable continuing to day trade Tesla, then go ahead and hang on to your position and wait for a direction to potentially develop. If you weren't planning on day trading today, I would just close it right at the beginning. Okay. Another one to look at is Netflix. We saw that Netflix, is having earnings. And looks like we're getting a lot more movement. Maybe not. Maybe roughly the same. It's a matter of scale. Yeah. So we can take a look at that was Netflix. No. That's why it looks the same. It's because it is the same. There we go. Okay. Okay, and then we can take a look. I would stick with the, oops, what just happened here? Okay, I would stick with this S&P. And in general, it's good to have, even if you don't plan on day trading S&P, you plan on day trading other things, it's good to have the S&P up so you can see the movement relative to the S&P. So if you see the S&P move up and then, for example, Tesla is hugging that bottom line, okay, and you say in this moment, will Tesla move up while the S&P is moving up? Or does it break down while the S&P is moving up? That'll give you an indication of the strength of that movement. If Tesla is breaking down while the market is moving up, that's an indication of weakness, like of strong weakness, and that is probably a trend that is going to continue. If you're just bouncing off this line because and the S&P is going up, then you're just going up because the S&P is going up. So if you see a pause in the S&P, then you're probably going to see a pause in Tesla. If you see a topping out in the S&P, you're probably going to see a topping out in Tesla, and you can use that to time your exits as well. All right, so we got S&P, Tesla, Netflix, and let's see what else we can take a look at. PG, that's another earnings play. Google. Let's do Google. Google, I believe, will be in play this week. That's interesting. That's not a lot of activity for Google pre-market. That's interesting. Maybe I'll pick a different one today. Well, let's do Abbott Labs, ABT. And also pre-market earnings. Earnings were announced over here. You see that huge surge upwards. And so what I want to see is, does it hang on to it? Or do we break out and keep on going up? Or does it kind of taper off and fall downwards? So we'll take a look at Abbott. Okay, so the interesting thought that I had this morning that I haven't had a chance to explore yet was that in the last few days, we've seen choppy sideways movement in the market, right? And we've also seen a focus move away from growth in tech, for example, the SMH stocks, and then more of a focus in utilities, real estate, staples. So what we're seeing is money moving and rebalancing. And that means a sideways movement in the market. Okay, so far, that's nothing new. We've been talking about that. So my thought is, though, what has been responsible for the movement so far this year in the S&P 500, this upward movement? And you may have seen a lot of headlines about the Magnificent Seven, and you may even have seen reports and analyses that have stated that the S&P is up at this point maybe around 15% this year. Okay, about 17%. At one point, it was up 24%. And that the only reason we were up so much was because of the Magnificent Seven. And in fact, the Magnificent Seven, when you add them up together, add up to 25 to 30% of the entire S&P, and that those Magnificent Seven on average were up before all this stuff, okay, right around here, they were up 95%. So if we remove the Magnificent Seven, the S&P 500 was actually down, not up. So the entire market was being carried by these 7 stocks. Now, if that was true, and those 7 stocks were mostly in the communications and semiconductor sectors, and money is moving out of those sectors right now and going into things like utilities and staples and real estate and industrials, what that should mean is an upward movement in the equal weighted S&P 500. If we remove the weighting or remove the significance of the Magnificent Seven. So what we would expect is that the Magnificent Seven are pulling back, but money is moving into a more broader array of sectors, and then those are going up. And so we should overall see a movement upwards in the equal weighted SPY, which is represented by RSP. Now, I haven't looked at this yet. That's just my theory, okay? And if that is true, then what we are getting is a broader market, a broader sector rally, and that is actually really healthy, and that's bullish. Not bullish immediately, like tomorrow or the next week, but overall, it's very healthy for the market. So I want to take a quick look at RSP, okay, and look at that versus the SPY. So SPY, very strong trend above all of its moving averages up until July. Then we came down, we touched the MA200. Now we're just below the the MA 50. So if I look at RSP, certainly it's been weaker, right? And we already crossed below the MA 200, and now we're above the EMA 20. So we are still weaker overall than the S&P 500. But what I want to see more specifically is I want to compare it to SPY, and I want to see the relative motion. I don't know if I added that correctly. Let's SPY. New price scale. There we go. Okay, so what we're seeing is they look very similar, right? And right now the RSP is still a little bit underperforming the SPY. What I want to see is at some point the RSP may cross over the SPY, and that's going to be a strong sign of strength. So it looks like we're not there yet, but this is something that we're going to want to keep an eye on. Okay, so that's it for today. We're opening in 10 minutes, and it's looking very much like yesterday. So yesterday in the S&P, okay, our pattern was it moved downwards. Just as the futures came down, it kind of rebounded a little bit and moved downwards. It was sort of a bear trap and a head fake for the markets and started surging upwards. Okay, so look out for that pattern. If you see it going down, just wait until you get confirmation. What would confirmation look like? It would look like something like you came up, you came down, you hit that level, and then it started going down, rather than coming up and then breaking out. Okay, so that's what we want to look out for. In the first half hour of the market, you want to see what it does. You want to draw a new 1 or 2 lines, and then see if it breaks up or down from there. All right, so hopefully you have a good idea of what to look out for in today's market session, and then I will see you in the aftermarket.